In this chapter, you will begin to explore one of the ways that we measure the size of our macroeconomy. We will explore the idea of gross domestic product. The first thing you will understand really has to do with what is our macroeconomy. And we tend to simplify this to what is called the circular flow. And in the circular flow, you will see that there are individuals, you and I, and businesses. And you and I have a demand for goods and services from the businesses. They supply those goods and services in exchange for money. However, the businesses also have a demand for the factors of production. They need land, labor, capital, and entrepreneurship in order to make the goods and services, and the individuals are the ones that own the factors of production. So we supply factors of production to the businesses. They supply the goods and services. Money is something that facilitates those transactions. So how does a country really examine the value of what it's producing, the value of what's flowing through that circular flow? We use the concept of what's called real GDP. Real GDP, you'll notice, has been increasing since the earliest years that we've calculated it. You will notice now that we are at much higher levels than we once were. So what really is GDP? Gross domestic product is the value of all final goods and services produced in an economy during a specific time within a nation's borders. So it's a value figure. That means it's dollars. It's what is the dollar figure of all the final goods and services that we produced within our nation's borders, and it's usually done by month or by quarter and then annualized. So right now, our gross domestic product stands at about $17.2 trillion. So from 2019 second quarter to 2020 second quarter, our country produced $17.2 trillion worth of goods and services, final goods and services. So how do they actually come up with that number? They use two different approaches, and those approaches actually should equal the same number. But one approach is the expenditure approach. It examines how much money are individual consumers spending on the purchases of final goods and services. How much do you and I spend on the purchase of final goods and services? That's consumption. How much do businesses spend on final goods and services? That's investment. How much does the government spend on final goods and services? That's government expenditures. And then we also recognize that other countries will purchase things that we produce, and we buy things from other countries also. So really what we're going to calculate is the value of our net exports. How much did we actually produce that was sold in another country, minus the value of what we purchased that other countries actually made? So the expenditure approach should also equal the income approach. This approach essentially adds up the value of all of the factors of production that went into making those goods and services. But one thing that we need to recognize is that prices matter. If we were to indicate that we have a much higher GDP than we used to, we have to recognize that, well, prices are a lot higher than they used to be. Well, if we're going to use the current prices, that's what's called nominal GDP. And it's really not a very effective way of comparing the growth of an economy through time because prices are always changing. Really what we'd like to use is what's called real GDP, which holds the prices constant at a base year and really just lets the quantities change through time. So by looking at real GDP, the way that we calculate this is we look at the value of what we've made, nominal GDP, and we sort of take into account these price changes using what's called the GDP Trade Price Index. And that sort of brings down the value to more real terms, to comparable terms. So GDP is a number that we'll look at to say this is how big an economy is, but there are problems with GDP. And in this chapter, you will understand the problems of the underground economy. The fact that it doesn't really do a good job measuring household production, and it doesn't do a really good job of determining the value of really the illegal things that are produced in our country. It also includes the value of things that are bad for us. So, for example, we may have a very high GDP in the United States, but we also have a very high level of pollution in the United States. And there's no real way that that number that we've looked at can accurately reflect the bad things that we're producing also. And another factor that it doesn't consider has to do with the fact that we really have little leisure time. We may be producing a lot of things and our GDP may be very high, but maybe we don't have as much leisure time as might be desired. And if you're working 2 or 3 jobs, you'll also recognize the value of leisure time really kind of might be important. So while we say we have a GDP of $17.2 trillion right now, we have to recognize there's problems with that number. So in this chapter, you will explore what GDP is, all the different approaches to calculating it, as well as some of the limitations of using that number. GDP is one measure of the size of our macroeconomy.